Thank you very much.
Okay, and we now shift to what is going to dominate January, besides, of course, pre-budget discussions, earnings season. The Q3 earnings season kick-starts with TCS on the 9th, that's Monday, and Infosys and HCL Tech on 12th, and Wipro on the 13th. The big question is, the slowdown easing, or is it worsening? And is a slowdown priced in after the 30% underperformance of these stocks last year? Rima is joining in with the key expectations. Rima.
Thanks so much for that. So let's start off by telling our viewers what we can learn and hope to learn in this quarter's results and commentary. Now, Q3 is typically a seasonally soft quarter. But this quarter, growth rates will further moderate given the higher furloughs. Remember, HCL Tech has already highlighted higher furloughs in 3 verticals: high-tech, BFSI and telecom. As you can see from the CNBC-TV18 estimates, the top 5 IT companies are expected to report a growth rate ranging from 0.5% up to 3.5%. But this is much lower than the revenue growth posted by the same companies in December of last year, where growth rates went up to more than 6%. So that's the first point. Despite December being a seasonally weak quarter, growth rates are going to slow down. But what we want to hear from the management is to understand the future demand. So in that, watch whether the furloughs will continue into Q4 as well. Secondly, how are the tech budgets? If the tech budgets are flat, and if they're not growing, and if large deals are absent, can the companies hope to see double-digit growth next year? Also, is there a moderation in the deal win outlook? What about pricing? Do you see any kind of pricing pressure? And finally, the hiring numbers, which in a way are seen by the market as a proxy for future demand. Let's move on and not talk about the margins. Now, according to the CNBC-TV18 poll, margins are expected to improve for the 2nd quarter in a row. The drivers are INR depreciation and secondly, declining attrition. Now, TCS's margins are expected to rise about 70 basis points to 24.7%. For Infosys, margin expansion is seen about 30 to 40 basis points. Now, while margins are improving for the 2nd consecutive quarter, the point made by IT bears is that margins are still significantly off compared to the peak levels that the companies hit post-COVID. Remember, in the immediate aftermath of COVID, IT companies had cut back on salary costs. Travel costs were absolutely zero, and that resulted in margins surging. So the question on margins is there scope to improve margins from here on, given that attrition is on a declining trend? Or will lower growth offset any kind of margin improvement, because you need operating leverage for margins to expand from here on? Now let's move on then to the other crucial bit, and that's guidance. Now, Infosys and HCL Tech are expected to retain their revenue and their margin guidance. For HCL Tech, remember, just in the month of December, the company had tweaked its guidance. They had said that growth will be at the lower end of their guided revenue band. So don't expect any kind of change. Wipro gives you a quarterly guidance, and next quarter's guidance, that's Q4FY23, is likely to be muted, and the management could just continue to be conservative, 0 to 2%. But as we've been saying, the question really is on future demand, FY24, FY25. And here the results are unlikely to give you any strong quantitative signal on what the future outlook and growth could look like. It's too early. Perhaps we'll have to wait for April to May period. And finally, a word on the stock price on valuations. Now, the Nifty IT underperformed the markets last year. Last year, the Nifty IT index was down 25%, underperforming the Nifty by 30%, because the Nifty was up 5%. But the Nifty IT index has underperformed the markets only once in the last 15 years consecutively, which means 2 back-to-back years of a decline. So will this support a trend reversal in CY23? And finally, what about the margins? These are where the current margins, valuations of the IT companies are. Valuations have corrected, but they're still at a premium compared to the historical average levels. So will we see a valuation downgrade from here on? Will we see derating? And that's going to be a question that the street will be watching. Back to you.
Okay, thank you very much for that, Rima. Let's now invite our guest. We have Arpura Prasad, the research analyst of IT sector at HDFC